one person proves it, everyone can verify it. The verification is cheap. You don't need to, recompute the same thing on every validator, right? So
we're going to be building this really simple experience for folks who really do just want to grab a binary, run it on their Mac, and get started. Just generate proofs, right? You're sitting in class, you're taking notes. You don't need that GPU. Let it cook.
How exactly do you expect this adoption kind of flywheel to take place with ZK mining?
Maybe I wasn't there in 2013 to mine some Bitcoin, but I am here. I have a MacBook. I'm ready to dedicate some resources to mining some ZK proofs and get involved in this new gold rush.
Welcome back to the Rollup, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. What's going on, guys? Welcome back to the Rollup. Today's episode is a deep dive into ZK with our friends Tim and Jeremy from Risk Zero and Boundless. Today's a special day. We're going to be going deep into some of the recent white paper release, as well as learning about the future of proof of verifiable work, ZK VMs, and more. Jeremy, welcome back. It's good to have you on. And Tim,
hello.
First time. So welcome on, Tim. Welcome to the Rollup.
Thank you, Andy. It's a good time to be here, brother.
What is that that is behind your head there that's moving? Is that a GPU or something running in the background?
Yeah, so you're probably referring to, where is it? It's right, this little guy here.
Right
Yeah,
there.
so that's my tattler. That's it's a live ticker. It's reporting the current stats for the Boundless testnet, orders going through it, cumulative cycles. Of course, we got the WAGMI banner up top and bottom, scrolling left and right. But like I said, I call it my tattler because every morning I walk in here and I expect to see those numbers up from last night. And when they're not, you find me in Slack asking why isn't the number going up. So there it is. It's dutifully doing its job. I think it was saying 4.3 trillion cycles on the current version of testnet. Not half bad.
We like big numbers around here, so trillions sounds big enough for a test net. Tim, it's your first time on. We've had several conversations with Jeremy. It's always a pleasure. Maybe you could start by introducing yourself and how you ended up finding not only ZK technology, but also Boundless and the Risk Zero team.
Yeah, so that's a long story. I'll do my best to keep it tight. So my name is Tim Carstens, principal software engineer here at Risk Zero. Jeremy and I go way back into the early Seattle hack scene, actually, is how I know Jeremy. So ultimately, the way that I know about ZK, if you really pull on the threads, goes back to a thing called the buffer overflow. But anyway, several years ago, Jeremy, Frank, Brian, they were starting up this company, and Jeremy hits me up, asks if I've been paying attention to what's been going on in the realm of ZK. I have a background in cryptography, but I hadn't been following it. And then the brother lays it on me that he's built this general purpose ZK VM that can just run software written in RISC-V. Sounded unrealistic, but I went ahead and I dove in, and as it happens, well, at that point, the previous 5, now I'd say the previous 8 years, have just been ridiculously good for ZK. Anyway, that's how I'm here.
Absolutely. And now you guys are commemorating this this Boundless release with the release of the white paper. We're going to go deep into everything that's happening on Boundless. I think the overarching theme here is the modern era of compute, which comes along with the financialization of compute. This is one of the things that has been financialized over the past few years. And this goes along with kind of the transition into cloud, and then ultimately out of cloud into a new modern era. And so ZK and verifiable compute is an important piece of that. And then the financialization of this, being able to request, trade, all of these different forms of financialization leads to a more efficient market for compute. So I think broad strokes here, maybe we can tell the story of how Boundless was conceived from Risk Zero, the ZK VM, from Zeth, right? The first ZK EVM equivalent. and ultimately into Boundless to solve some of the problems that you guys saw as you were building this out. Kind of like trace out the problem statement for us. Generally, why is compute being financialized and why is that important?
Yeah, so I'll do a quick version and maybe Tim can add some things in here. So I think, when we built the ZKVM, we knew that this would have a huge impact on sort of scalability and privacy implications on blockchain. But more generally, it really is an alternative mechanism for verifiable compute, right? Like fundamentally, what is a blockchain doing? It's running a computation publicly with a huge amount of redundancy so that you can be sure that it's run correctly even without having to trust any third party, right? When I run compute on AWS, I assume AWS does it right, and if they lied to me, I would never know because I can't double check what they're doing. Blockchain, in many ways, there's many impacts of blockchain, but one of those impacts is that it created for the first time sort of publicly available verifiable computing. And really, in some ways, ZK is an alternative mechanism to do verifiable computing, one that doesn't have the same issue of redundant recomputation of the everything. So one person proves it, everyone can verify it. The verification is cheap. You don't need to, recompute the same thing on every validator, right? So, and at this point now, ZK is actually less expensive of a way to do verifiable computing than consensus, right? So I think that was a huge unlock. But what we were seeing is just in terms of when you have something like this capacity, there's a question of how does a user actually make use of this, right? Like how do I actually deploy an application either on chain or off chain that makes use of this verifiable computing capability? I mean, one option is I can go run my own server and do the ZK computing myself and then send the proofs to people to verify. But for a lot of use cases, that doesn't make sense, right? And so one question is how do we actually sort of bring this to the next level? Boundless is really sort of this universal ZK protocol that allows for everyone to be able to tap into this new mechanism for verifiable compute on all of the different chains, right? So I can ask for a proof from ETH and get the proof delivered there. I can ask on Solana, right? Like you really try to make this mechanism where we brought this new capability everywhere. And then I think in terms of how this relates to financialization, right? Like we're basically building a new market for this new mechanism for computing, and it has a lot of interesting properties. And I think Tim can go into some more of them, but like I think the biggest one for me is really, in some sense, for the first time, you can talk about like a spot market for computing that makes sense, right? If you think about a normal spot market, you have to have some level of fungibility. But the reality is it matters whether AWS did the computation or, Azure did the computation because I have to trust those parties. And so my level of trust relates to on the other hand, it doesn't matter who did the ZKP compute, it's self-verifying. So it actually brings new capacities to the ability to sort of make something fungible, which makes it more commodifiable, which makes you be able to build spot markets. And so a lot of what the paper is really about is how this sort of innovation impacts the way that people use compute, verifiable compute in particular.
Yeah, Tim, anything to add there?
Yeah, like I think that Jeremy did a fantastic job explaining it. Um, my own kind of path to Boundless, I think it's very much the same kind of story, but I'll put a little bit of a different spin on it. Um, if you look at the room I'm in, I think it's pretty evident that I really like computers like a hell of a lot. I got this machine over here. Its primary job is, media editing and, maybe a little Factorio here and there. Right now, though, it's functioning as a space heater. It's on, but it's not doing anything other than keeping me like cozy. Um, and like that's chill and all, but like, how to put this? A little bit more than 10 years ago, my friends and I were hanging out on Bitcoin Talk Forum. Nobody knew where any of this stuff was headed. And it was just a bunch of computer science, really geeky people, a few interesting, very philosophical people, really small scene. Everything seemed possible. And one of the things that was possible back then is we could warm our homes by mining, which my friends and I did. And that was some of the most fun I've had on the internet, before or after. And as I mentioned about how I know Jeremy, I've had a lot of fun on the internet. And so one of the things that, has really inspired, is part of why I joined Risk Zero, and it's absolutely a big driver in why we built Boundless the way that we did, is we're really trying to, in some sense, get back to our roots. Get back to this idea that Satoshi had envisioned, where it is possible for anyone who's, online, to be a part of these networks in a way that they choose, right? Not in a way that someone else has gatekept from them or anything else like that. Um, there is a real freedom in this. Those freedoms were enshrined in his design. They weren't just a terms of service agreement or something. And I think that a lot of this field ever since then, has really been driven by the desire to expand the realization of that vision and to cover more of our internet experience in that way. Hard to do that, of course. And ZK, I think, is a significant step forward to realizing some of those visions. I don't think it'll be the last significant step forward for this space, but we're going to get there one step at a time. And I think that Boundless and the way that it alters the execution story, for decentralized applications, I think it's an important part of that.
And I think, just to bring about sort of the next topic with regard to this idea of proof of verifiable work, one of the great things about Satoshi's design was that it basically allowed an open network of people to work together to generate consensus. And the more people that were part of the network, the stronger the security of the network was. But one of the unfortunate things about the design, and one of the reasons that even though I loved Satoshi's papers, I was a little skeptical of it when I first read the design, was that it lacked any sort of scalability. It was going to be doing 4 transactions a second max, because even though you could throw more and more compute at it, that compute wasn't actually going to anything that helped the end users. It was really just increasing the security of the network. What's interesting is that with ZK, there's this new possibility, which we really talk about in the paper, of proof of verifiable work. And the idea there is that you're, again, making an economic incentive mechanism to participate and to produce work for the network. But that work is not just going to secure the consensus, but that work is actually going to doing useful work for end users, to actually running real compute that's actually for user transactions, right? And so I think that in some ways ZK unlocks the scaling not only of like verifiable computing, but also this scaling of this sort of incentive mechanism for computing and the ability to really bring online massive amounts of computational, there's all kinds of GPUs just sitting there idle. And I think that if we can bring those online in a way that's not just an economic security sort of purpose, but also to actually be able to do real work for end users, then we can build, a real world computer that has the computing capability that is significant enough to actually really expand the use cases that are possible in blockchain.
So the first iteration of a lot of these blockchain protocols was obviously cemented after Bitcoin around proof of work, Feathercoin, Mastercoin. There was like Whitecoin, Blackcoin, this coin, Dogecoin. There was all of these proof of work chains. So the original idea of blockchain, as you described, Jeremy, from Bitcoin's papers, was obviously proof of work. That is what everybody knew as the origination of these really tough math puzzles, essentially only to be able to be computed by expensive hardware, which would then be essentially the security parameter, if you will, of these networks. We evolved then into proof of stake networks, Purecoin. There was others. Eventually, we had a lot of the Ethereum killers. Even though Ethereum was proof of work at the time, we had a lot of these proof of stake Ethereum killers. And then even Ethereum transitioned from proof of work to proof of stake, which I think hot take is the people think that was a big mistake for Ethereum when it comes to differentiating against other proof of stake networks. But don't need to get into that. That's kind of up for debate. We understood why we had a lapse in performance from proof of stake networks and proof of work networks, which is essentially the redundancy of passing of information from nodes to achieve consensus, right? And now we're moving into this proof of verifiable work paradigm, as you were describing. Is this the logical end game for this next era of on-chain interactions and experiences?
Right.
How does this evolution shape up in your mind?
Yeah, I mean, from our perspective, this is the next step in the evolution of blockchain sort of incentive mechanisms. I mean, it is worth noting that proof of verifiable work is more of an incentive mechanism than like a traditional consensus mechanism, in that it's not picking what the longest chain fork is or what have you. But I think that the two things that I think are significantly different than either proof of stake or proof of work is that one, um, you are rewarding work, but this time the work is actually meaningful, useful work for the end users. And two, that the total amount of work being done per unit time isn't limited because of the fact that ZK has this amazing magical sort of succinctness property, which means that it's equally easy to verify an immense amount of work and a tiny amount of work, and no matter how much work you have, the verification times don't go up. What that really means is, like, historically, any consensus based verifiable computing has a limit, which is the amount that you can fit in a block and still comfortably distribute to everyone for redundant verification. And fundamentally, ZK doesn't have this limit. And so we really, I mean, I think that what's very interesting is proof of verifiable work is sort of has not been done in this sense before. And I think we're very excited about the potential of that. And really, I mean, obviously we believe it's the next sort of evolution in this sort of history of blockchain. I mean, whether it's the end game, I mean, like there continues to be innovation in this industry, but I think for at least the next couple of years, it's going to be the way to go.
In hindsight, I think this is so incredibly obvious that I'm surprised no one else has done it. Like, I think, if we kind of start with the proof of work paradigm and we look at even something as simple as Bitcoin, the 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 parallel of proof of verifiable work in Bitcoin would be, suppose we have two miners, half of them mine, half of that SHA-256 algorithm, the other one mines the other half, and then they combine their computing power, and boom, you just mined a Bitcoin block. Like, that, I think, would be such a good idea, but we just never got that sort of capacity. And so now, you fast forward to today and you get ZK proofs. And just to be very specific, this is proof of verifiable work. You're able to essentially have one prover mine or generate, some say, call it 20% or 25% of a ZK proof. Someone else beats them to the rest of the 75%. You can now, and the usefulness, Jeremy, that you describe is the ability to combine these two pieces into a single proof and therefore submit that as the useful work towards the end user.
Yeah, and I think that the key thing to note is, like, if you look at the Bitcoin case, what the real issue with having half of the nodes do X and half of the nodes do Y is, how do they know the other guys weren't lying, right? And I think that really ZK needed to exist for this to function, and also you need the breakthrough in costs that and usability that have come from the modern ZK VMs to make this actually a practical thing. Like, the reality is, if you look even 2 years back, the cost of ZK was such that even though in theory the scaling works better, in practice it was just cheaper to verify the same thing 1,000, a million, whatever it is, times on all these computers, because the effective cost of all that redundancy was still less than the cost of doing the ZK proving. But ZK has dropped so precipitously in price, and if you go back 8 years or something like that, this just didn't even remotely exist, right? Like, ZK was a nice, like, theory lecture in like your cryptography class at the very end, because no, it was completely unusable. So I think that the dream or the vision of this is certainly something that's been discussed over and over again. Like back in the day, right, when people were doing proof of work mining, there was always a question of, well, maybe we can make it do something useful, like we can do some kind of study at home thing, like, and there's a lot of attempts to like make it fit in. But at the end of the day, without the ZK ability to quickly verify the correctness, it only really suited a very, very small number of problems. Yeah, I mean, maybe prime number search could be done, but like doing user transactions is another thing entirely. They didn't have the right structure to have that sort of thing. And now with proof of verifiable work, all computation has that structure, which is, I think, really impactful.
Yeah, absolutely. And Tim, I kind of want to hear from you because you were there, like you said, 2015 Bitcoin talk forums. You were like heating your house using these Bitcoin miners, and it really was like this like digital gold rush where it was like you can get some picks and shovels, head over to California, and you can start mining for Bitcoin, digitally, of course. Now, fast forward to today, we have a very similar concept of essentially like mining these ZK proofs, right? And so I think, a question or thought that might be, in our audience's mind is like, well, how do I get a piece of this action? I wasn't there in 2013 to mine some Bitcoin, but I am here. I have a MacBook. I'm ready to dedicate some resources to mining some ZK proofs and get involved in this new gold rush, if you will. Could you kind of trace some similarities? What was it like back
Yeah,
then? And is that a fair analogy to today?
I think it is a fair analogy. I was out at ETH Denver just like a month or so ago, and I was hanging out in line to get into the Bitcoin show, and I was talking to some of the Zoomers, waiting in line, and one of them brought up that like, you know, she feels horrible that she was in like eighth grade back then and like couldn't have been in the scene. She feels like she's too late. And I was like, no, cuz like you're not too late. You were right on time. Like everything that's happened on chain up to this point has been like boom, out on the horizon when we're looking back, everything that's happened up till now is we haven't hit that hockey stick yet, right? People get excited about coin caps, in the ballpark of a trilly. Trilly ain't nothing, my friend, right? Like a trilly's like one business. We're talking about the whole economy here, the whole internet. Orders of magnitude more opportunity to be had. So like to me, it's like, yes, I totally understand the feeling of growing up and being inspired by a thing and not quite being able to be a part of that scene at that time. That happened to me in operating systems, my first love. But whereas operating systems is like a done story, right? Like Unix was the last one we needed. Uh, all this technology that we're talking about right here, very much the opposite. Um, the classic question, right? What's the use case? Historically, it's been moving tokens because that's what the technology has historically been well suited for. Here, though, we are doing more, and we're doing it with ZK in this additive way. Okay, bringing it back on. So you asked this question, all right. So for those folks who are saying like, okay, Tim says it's like I'm not too late, I'm right on time. How do I get in? Uh, it really is the case that we're talking about the computer you already have. A MacBook is great. A Mac Mini is great. You do not need an expensive NVIDIA PC, although if you happen to have one, it's also great. Um, and we're in this situation where it's already the case right now. You can be joining in on the test net. You can be contributing to the numbers on my ticker if you want to run the software. It's the earliest version, which is not going to be the most user friendly, but you see how passionate I am about all of this stuff. They got me on the task. We're going to be building this really simple experience for folks who really do just want to grab a binary, run it on their Mac, and get started. Just generate proofs, right? You're sitting in class, you're taking notes. You don't need that GPU. Let it cook, right? Like, laptop is back at the apartment. You're out. It's Friday night. You are done with that thing. Set the keyboard aside. Make the machine work for you. Like that's what we're talking about here, and that's what we're going to be opening up. And it's not going to be this kind of thing where it's like you're getting squeezed out by some other player who's got cheap power because they're next to the river, or who's got cheap power because they can burn all the coal in the world without filtering it. Like you're not competing with that because it's not an either or, it's a yes and. right? Like that big player with the data center, you bet they're rocking volume. That's what they're doing, right? But the demand for execution on chain is insatiable. Everyone knows what Jevons paradox is now, thanks to AI and like everyone getting a good lesson there in utility and such. So I think it's going to be a really exciting time for folks. I think that this network here, we really are trying to do something that's very cypherpunk. Jeremy and I, like true to the roots, Frank, true to the roots, all of us, true to the roots. So
And
that's
I
the
think
pitch.
Tim,
Here it is.
to Tim's point, I mean, I think the one thing that's really highly relevant is the right now a lot of the value, the use cases for chain is a lot of sort of DeFi kinds of applications, and partially the reason that is because at the current cost of the consensus-based verifiable computing is the only thing that makes sense, right? Yeah, I'll pay $1 transaction fee to like make some trade that's going to net me, $100 or more, hopefully, right? But like, I'm not going to pay $1 transaction fee to like click the like button on like a social network, or like move like 2 units in my like game I'm doing or whatever it is, right? And in order for that type of but when you bring the costs for verifiable computing down, and when you get past this sort of scarcity, like, look, there's only so much space in the block, right? And so if you have more demand for compute than fits in the block, you just got to keep raising that price until like it fits again, right? And as a result, you'll never get more compute than a certain amount, and only the highest value transactions are going to get through. You actually open that up, now you're in a realm where the cost of the compute is just the cost of the compute. If more people want to do computing, more people can spin up provers. And what we've seen is when you make computing unbounded in that regard, right? There's almost no limit to the appetite people have for compute, right? The cheaper you make compute, the more money gets spent on compute, right? That's the Jevons paradox thing. It's very surprising. You think, oh, I'm going to lower the costs, so people are going to spend less money. No, the answer is you lower the cost. There's more things to do. People actually spend more money in aggregate, right? Even though they're so that these efficiencies, as ZK brings that kind of efficiency gains to verifiable computing, I just think it's going to be a huge boon to everyone.
Yeah, so maybe a bit more concretely, Jeremy, how exactly do you expect this adoption kind of flywheel to take place with ZK mining? And perhaps you could also just explain ZK mining in terms of like the like how that process works a bit deeper, and then kind of how you see that kicking off to enable perhaps some of these net new application and ideas or just use cases that you're excited about.
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now, maximize yields on institutional-grade liquid staking with METH. Unlock $1 trillion of capital via Bitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle. Ladies, gentlemen, Anons, and Degens, it is stablecoin season, brought to you by your favorite, the best in stablecoins, Frax. USD dollar stablecoin backed by the best in the business, the Biddle Fund by BlackRock and Superstate. This is stablecoin season. It is the yield-bearing stablecoin by Frax, coming soon to a chain near you. RedStone is DeFi's modular oracle, supporting over 100 clients on over 50 chains and offering 1,000 assets. RedStone is the leader for Bitcoin staking and yield-bearing assets. They offer the most robust, customizable price feeds available in any model. Join the RedStone exhibition today.
Yeah. So I mean, I think so we lay a little bit out. There's really sort of two major parts of what makes ZK mining work. One is sort of the structure of the network and the economics, and all of the sort of work that Tim has done in terms of, you know, the auction model and all the other kinds of things that actually make it so that there's, you know, within the marketplace component of Boundless, that there's a way for someone to request work, for provers to be able to, you know, do the work, get paid. So there's that sort of component.
So you
And then
built
the
like a
other,
spot market rather than like service agreement oriented cloud
that's
esque
right.
era,
So
essentially.
the
Okay.
idea is that we're going to do a spot market. What's interesting, and this is where the financialization comes in, if you build a spot market for compute, you can actually construct things that look a lot like SLAs as derivatives of that spot markets. Effectively, an SLA is actually just a computing future on the compute spot market, which is like it, bounded by some like, yeah, exactly. I want to be able to make sure I can get this amount of compute for this cost for some period of time. And so and maybe that cost is a little higher than I could get at the spot market right this minute, but I'm willing to make that agreement with someone else who's willing to agree that they're going to produce it, you know, on threat of, you know, say, slashing if they don't. And now suddenly we actually have a contract that basically is an SLA, but it basically is built as a derivative on top of this sort of spot market that exists. So if you, just to break down the question of how does proof of verifiable work under the hood, right? Well, so there's these two components, right? There's this sort of network component, which is this sort of spot market for compute, and how do people lock in the requests? How do they settle? You know, a lot of that's explained very much in the paper. And then the other really relevant point is, because it's sort of this open network and we want to have a reward model that rewards people for the amount of computing that they have done as part of the network, we need a way to like verify that this amount of computing is done. And so one of the other parts of the proof of verifiable work is this mechanism to cryptographically link to basically make it so that if I generate a zero knowledge proof, I can prove the amount of work that went into it. One of the things about the succinctness of zero knowledge proofs is I could be proving a huge amount of work, or I could be proving a little bit amount of work. The proofs look the same. So the first thing is you need to do is actually have a way to cryptographically link and connect the total amount of work being done into the final proof, so that in a way that isn't falsifiable, so that I can say, oh, look, if I show you this proof, you know that I did X amount of work. And then the second thing is you need to make sure that you can't get credit for that same work twice. So you need to make sure that there's basically a unique identifier that goes into every proof that's associated with the prover, that they can't double spend it, right? Which again goes back to sort of part of the network part of it. But basically what we've figured out is an efficient mechanism to make that both those things happen, right? And so the design of Boundless sort of solves sort of both those issues, which is, one is like, how do you measure the sort of computing that's being done, and then how do you and thus know how to properly incentivize it, and then how do you also make sure that the spot market functions efficiently, and more importantly that the spot market doesn't become your scaling limit, right? Which is very interesting, because as part of that, what we had to do is design the spot market to not run on like an existing consensus-based chain. So the actual overall Boundless works across all the chains, and the provers are just basically a pool of computing, and they talk to these market contracts on all of the chains. But there isn't a central sort of like chain that runs the whole market. It's actually done in a decentralized way, and by doing that, what means that we're not like, if we introduced a new consensus domain and every transaction had to go through that new consensus domain, well, even though we have an unlimited amount of computing available to us, the spot market wouldn't function past a certain volume, right? So I think like there's a lot of very important challenges on this. You know, we spent a lot of time looking at a lot of different designs for how to build this next step of the company. I think at one point we had this Project Trident, where we actually had 3 completely different designs. We actually built out full prototypes of them all, just to really understand what the problem space of this whole thing looks like. And I think the one we landed on, we made is like a very no compromise solution in terms of truly decentralized. And yeah, boundless in the part of the reason for the name. So
Yeah. Okay. So ZKVMs allowed for generalizable ZK proofs rather than having to write circuits and have to rely on very specialized proof use cases. This then changed the way people are thinking about ZK applications and coding and writing ZK applications, right? Then introducing boundless and proof of verifiable work, then effectively, I mean, the big breakthrough here is removing this need to have prover decentralization, again with this me plus you kind of idea versus this kind of me versus you, and then these two components together, obviously summarized, then bring us to a world where we can have much more efficient applications on chain. Well, whether they're on chain as we know it today, or kind of in this newer version, this has allowed us to basically make computation verifiable at scale, which again is the big breakthrough that we're all kind of pushing for in the ethos of why we're here.
Yeah.
Yeah.
And I think there's still more advancements to be made. Like I think one thing that's worth noting is that this really does solve the problem of how do you do an arbitrary amount of compute. I think there's still an interesting question around like how do you make sure that like the data availability problem is solved? How do you make sure that like the sort of, you know, updates to shared state gets done? So I think that this is not the like the end of all things, but I think in terms of this limitations that have always existed on blockchain in terms of compute, yeah, I think this will basically really change the game dramatically. So
Yeah, I'm going to add on that too. You know, it's going to do these things. It's going to scale the execution. It is going to be a big deal. A lot of the application developers that I'm working with right now, the designs that they are pursuing, the feature sets that they are pursuing are things that, you know, they've been contemplating for years, but have been simply prohibitively expensive to do in the kind of traditional way of just writing a smart contract and running it directly on chain. And so for these teams, it's like, you know, it's like the whole organization is waking up and realizing that, you know, they can think big, that suddenly it's okay if you need to run colossal aggregating computations at high frequency across tons of chain. Like all the stuff that we're used to doing in the DC, in the data center, you know, you're going to be able to do with your on-chain applications. And not only are you going to be able to do it like in principle, but like you're going to be able to do it like in practice. And the experience is going to be very familiar to the user. That's the thing we haven't really talked about here yet, is it's like, this is like one of these subtle points that's like another massive motivator behind the design of Boundless. Like, okay, so earlier you brought up like some of the other projects we did. We did things like Zeth, you know, the first Ethereum block proofs in a ZK VM, right? We did a number of these other things. We had one of our first demos, we did Battleship, like the old classic board game. Amazing game for ZK, right? We did these things. And for each of them, it's like, oh man, wouldn't it be cool if, and then you envision what amounts to like a 12-month project to like build a really cool demo around the thing. And where that time goes is basically that, yes, the ZK lets you prove the computation, but now you have to integrate that into like this whole ecosystem that was designed before ZK was a thing, right? So all sorts of just like the most kind of surprisingly hard problems because they're so low in the stack, right? Like they emerge. So who's going to generate this proof and how are they going to get the data? What's their incentive? What happens if they don't deliver it? Like these are all things that suddenly matter. You spend a transaction on chain, you just accept that someone's either putting it in a block or not, you know. But once you're saying that there's more than just that, suddenly the user experience has more types of outcomes you have to contemplate. There's also the question about what actions is the user taking to drive this process. We're all very familiar with, you know, connect my wallet, sign and send the transaction. That's a flow that folks in this space already know. You don't want to mess with that. You don't want to say, by the way, you need another browser extension. You don't want to say, by the way, you need to sign up, link your Google account to that. You don't want any of that. You know, you want that experience again for the user that's as simple as I'm using an application, I'm authorizing this action, send it out to the network, and most of the time it works out fine. That's what you want. And to do that with ZK, as a if you're an application developer, if you're a business trying to provide an experience to the user, it's not enough to download a ZK VM. It's not enough for there to be a smart contract on chain that verifies these proofs. You need a whole thing to manage this flow from the user and to integrate it on chain and make all that work. You need to do it in a way that also makes sense for the infra providers. You know, like if I'm proposing a block, I get it. I'm going to maximize, my extract, right? I'm going to get my value out, right? I'm going to sequence some transactions in an intelligent way. I'm going to do like all these things. Software exists for all that. If you're a prover engaging in ZK proof generation, you kind of have a version of this too. You're going to have to pick out which tasks you want to, pursue, how aggressively you want to pursue them. Are you going to race to get it done faster than everyone? I'm rambling. The bottom line is there's a ton of problems that are entailed in realizing this many years long promise of ZK's ability to like improve the on-chain scaling situation. And in some sense, like we've talked about how Boundless is exciting for home mining, we've talked about how it's exciting for scaling, but on a practical level, the day-to-day thing that's going to really excite developers in particular and ultimately users in the end is going to be that we've identified and solved a tremendous number of integration problems that most developers in blockchain haven't even contemplated yet because they haven't tried ZK yet. So you should come and check out Boundless. I think that you'll find that we've solved a lot of problems you didn't even realize existed. And you might not even notice that there are things that needed to be solved because I think we did a pretty good job making it smooth.
And that's partially because of the slower progression of ZK and then the accelerated progression in the last 2 years, but also just whether it be funding or just people. We find that people oftentimes do what the market wants, which is often like somewhat of a band-aid solution, right? Like you see that things in the market get rewarded because they're fast, cheap, and good, but perhaps that they're not on the same ethos of the amount of validators or the amount of nodes or how many what's actually kind of happening. And so like we've seen these like solutions come and they will continue to come, but again it just keeps coming back that the end game is ZK. Now I would like to pose kind of a more pointed question here. When we think about something like the proof supply chain, right? Kind of making an analogy to the MEV supply chain, there has been a consistent addition and subtraction of certain actors in the MEV supply chain, and there's a notion that as you add more actors to the MEV supply chain, there becomes more and more centralization choke points. Is that similar, or is there a centralization choke point or a choke point in this design that we ought to be intellectually honest about and think about how to improve on?
So I think one thing that's really interesting is there's this idea. I think it's really important to separate the idea of decentralization of the market making process from the sort of distribution or like having a diversity of provers, because they're not actually the same problem. And I think there's a little bit of a confusion because most people have built consensus systems in the past wherein those two things are the same, right? Like fundamentally, if all of your stakers or all of your miners in the Bitcoin sense, if 51% of them or 80% of them are all the single entity, then your whole consensus system is controlled by a single entity. Right. Now, what's interesting is, let's talk about this in the sort of sense of the way that the market design for Boundless works. So in the Boundless market design, the markets themselves operate on existing chains and they inherit the the censorship resistance properties and the availability properties of those chains. And so the markets are open to everyone so much as anyone can post a transaction to those chains. So as much as you believe in the censorship resistance of a given chain, that's how censorship resistant the market making mechanism itself is. What's interesting is let's imagine that some huge prover like that is in some megalith, like AWS decides they're going to get into the ZK proving business and they're going to undercut everyone and like, all to the wall. Like, let's say they, for a moment in time, end up with 80% of the proving volume. Well, what's interesting is what can they do with this? Well, let's say they want to not prove your transaction. Well, you put your transaction on the market. The market's on an actual existing chain, like say Ethereum. Amazon's going to ignore it. Now, if the 20% of the market is rest of the 20% of the market is controlled by honest users, they can still take that up. They can still take that. Now, maybe the truth is their prices are higher because Amazon's getting some, crazy, cost savings. So maybe you have to pay slightly more for one of those players to be able to do your proof because Amazon's going to ignore it because they don't like what you're proving. it's fine, right? Like you've actually not censored the end user, right? Or let's say Amazon's like, you know what? Actually, now that we've controlled 80% of the market, we're going to just jack up prices, right? Well, the second that they go above the price that like I can run a machine for at my home, I'm just going to come in and undercut them, right? Like it's a free market. It's a free market. And as long as the market itself cannot be distorted, which in this case, like these markets exist on chains that do have a censorship resistance properties, you're relying on a free market. And yes, there will probably be some consolidation, right? But that consolidation doesn't damage the availability. It doesn't damage the censorship resistance properties of the actual end users. And look, I mean, I think, most of us have a strong faith in free markets. And the truth of the matter is that like McDonald's makes really inexpensive food, but not everything is a McDonald's because that, like it's so I think that one thing to look at is like if you design the actual mechanism by which you make the spot market operate such that it is not itself dependent on like say 51% of the provers being honest, which in our case it's not, then this idea of you're really talking about trying to increase prover diversity, which is a useful goal in certain senses, but also free market will always maintain some level of that. And yes, there will always be some level of consolidation as long as that doesn't harm the end user. That's a great thing to have.
Got it. Okay, so the censorship resistance properties derive from the individual chain themselves.
Correct.
We can within the boundless design we can be subject to those. However, the system for the spot marketplace, as we call it, is it could be subject to like essentially prover collusion, if you will. However, it's designed in such a way that that ends up being a favorable outcome to the end user rather than to the parties who are colluding in this specific
Yeah, I mean,
example.
another good way to say it is like, let's say provers do collude and they try to raise prices. Like there becomes an arbitrage, which is like, let's say the cost of computing. Let's say the prices are above the cost of computing. Now I can go buy a computer, or just rent one from a cloud provider if the costs are that high, and I can just prove for less than all the colluding guys are proving for, and for more than it costs me to run my computing, and I can make some money, and there's like an arbitrage opportunity. And we're relying on the fact that in a free market there's nothing preventing anyone from acting as a prover. And if you make that market actually truly open, then the free market should make sure that the prices are always as low as they can be, unless the colluding parties can somehow distort the market making mechanism itself. Then there isn't a way because that exists across all of these chains, right? Like there is where once you make a market an actual proper free market, the amount of useful collusion that exists is just always limited because there's always someone willing to defect and make more money, right? Like that's what we're relying on. We're relying on the fact that there's a bunch of people colluding, and one of them decides that they're going to defect and not price fix and make a cheap thing. Then the prices are going to go down to what they ought to be. And actually, what's interesting is that in a market like this, there's no barrier to entry. The barrier to entry is I have a computer at my house, right? And in a market with that low of a barrier to entry, collusion is nigh impossible, right? So faith in the free market is the trick here.
Yeah. So zooming out from this and kind of just looking at, like the openness of this free market, I was around in 2016, like I was in a school and they had all these computers and I just felt like this. I was just like, wow, this is such unused resources here. But I just didn't at the time have like the technical ability to like set them up in such a way that they would be mining Bitcoin. There was just a level of like knowledge that I was missing there. What is going to be like
I have heard some stories of kids doing that in their dorm room and getting like suspended and expelled and stuff.
My own knowledge limited me from getting expelled. So I think, I'm very grateful for that. I guess
could have joined the dropouts.
Yeah. Well, that's another conversation. So in this case, like, what is the front end? What is, the entrance point? I have a computer. I want to be involved. Can I just And so actually, like, you know, back in the day, it was like, well, you know, if you're not going to set up a whole Bitcoin, you know, miner, you can join one of these like cloud mining,
Mhm.
like cloud pool type of situations. And that
Or
was just front
download the
end.
whole chain on your computer. Spend 4 days downloading the entire chain.
Well, even
I've
that
done
you had to
that.
have some software. So in this case, like, what
Yeah.
is the front end? What are people gonna like actually interact with in order to contribute to this marketplace?
Yeah. So I mean, I think right now on the test net, like the bar is a little higher than we would like it to be. It is like just because it's new, and we are currently, you have to kind of do the bidding process and so on, and we have software that does it, but like realistically, you need like a pretty serious GPU and a decent internet connection. But we are absolutely are working aggressively at driving down that fundamental complexity. I mean, at a fundamental level, our proof system runs very efficiently on normal consumer grade hardware. It runs, on cards that are normal consumer cards, gaming PCs, and even on like laptops and so on. And we are currently working on projects to like try to figure out how to build things like the proving pools kinds of use cases, right? So I think the short version is our vision is to democratize the capacity to do these zero knowledge proofs, very much so. I think if people go join the testnet right now, they should expect it to be a little more like the early days of Bitcoin, where like you had to download. It was a bit of an IT complexity. But that's the difference between the fundamentals on the ZK, uh, and in particular in our proof system, are very well suited for getting things all the way down to a much more grassroots level, and we're very much interested in that. So, yeah.
Yeah, I think one consistent trend we see across the entire space, a lot of our conversations is just lowering the barrier to entry in general. We've been very, very bullish on just accelerating the pace of experimentation by lowering the barriers to entry to do that experimentation. And every time that we talk about ZK, I'm just increasingly more excited. So, Tim, Jeremy, it's been an absolute pleasure. Thank you guys for the work that you've done on Boundless, and congratulations on the white paper. Looking forward towards mainnet and more of the things that are coming. So, gentlemen, thanks for your time.
Thanks. It was great talking to you guys again.
Thank you so much. Be boundless.